Welcome back, guys, to our fourth community call for Enzyme Finance. I hope you guys are doing well. I hope you guys weathered the storm of that mini bear market we had there in Q2. It's awesome to see that, not just Enzyme, but also like DeFi in general, really did really well in this, first big test we've had really since DeFi summer. And all the infrastructure worked, right? No big lending protocol failed. Enzyme worked as it should. Vault managers were able to do what they need to do. And that will show in a lot of the stuff that we'll review today that, our network statistics have only been going up, only been improving, even though, most assets are up their highs, which shows that there's been a net inflow of more and more people using on-chain asset management. So it's an exciting time to be here. And, we'll be hosting this today with me and GL, the two user representatives of Enzyme. And we've got a lot of guests today that are, for example, hack money winners that are now building on top of the Enzyme ecosystem. So yeah, today we'll talk about what is Enzyme. We'll go over some network stats. We'll show you, GL will share some new features that we've launched since June. Then we'll have some guest appearances of new things that are currently being built on top of Enzyme. Some ecosystem news, as you guys probably noticed in the last few months, we've had several listings. We've had liquidity in general for the MLN token improved significantly, where 1 year ago, all you could do was buy Enzyme on Crack, and now it's essentially listed on any major DEX and any major centralized exchange. And we'll review some progress for Sulu and also the road ahead, and finally some tokenomics updates. And as always, you guys can always ask questions now. If we don't get to them right then and there, we'll always go through the entire chat at the end of the Q&A, and no question will stay unanswered. So let's dive right in. So first off, for those that are new, I always have to do that because, we want to make sure that we pick everybody up wherever they are. And so what even is Enzyme, right? Enzyme is the on-chain asset management protocol. Enzyme was the first and Enzyme is the biggest. What it essentially allows you to do is to either be an investor or fund manager, right? You either can find opportunities to allocate to, right? So maybe you aren't in a position to, invest in a big hedge fund, but you can find on-chain funds that show you exactly what the performance is, what are they holding, what are their strategies. It's fully transparent, where you can trust a track record because they can't fake it, right? Because it's based on Ethereum. It's also available 24/7, whereas a traditional fund, you have to wait for monthly subscriptions, quarterly redemptions. And I'm saying this as a fund manager myself, right? But it's so much easier when you have 24/7 access and you can see the balances, you can redeem, you can add whenever you think it's most opportunistic. And of course, last but not least, it's non-custodial, which means the assets, you invest them from your MetaMask, for example, and the vault manager actually never gets them, meaning they can't withdraw them. All they can do is have trading privileges over them. Okay. So as an investor, a lot of advantages. And as a builder, if you ever thought about, hey, maybe I could start a hedge fund, a venture fund, or just like a fund in general, traditionally it takes a long time to set it up. It costs a lot of money. With Enzyme, it literally can be done with one single block transaction. When gas fees are normal, perhaps $50, no more, to set up an entire vault. And by now we've got all the DeFi integrations you could possibly want, which I'll review in the next slide. But it gets you everything from lending, staking, AMM pools, trading, synthetic assets, and so forth. And that's only expanding. And at this point, we've already have over 230 different assets, and that too is expanding. So just to give an overview of what is possible now, because if you ever, some people might still have an old image of, well, back then we were called Melon, now it's called Enzyme. But if you looked at Enzyme 1 year ago today, essentially, all you could do was trade on, I think, Uniswap, Kyber, 0x, and that was about it. Now we have live integrations, meaning you can do this right now. You can lend money out on Aave, on Compound. You even get the comp rewards directly to your vault where you can claim it. We've got Curve, we've got Idle. Still, we got all the different trading integrations from Kyber to Paraswap, to Uniswap, 0x. And of course, Paraswap is great because it's an aggregator, which means you get to choose, you get the best price also from all the other protocols. Like, we don't have Bancor yet, but you can get Bancor prices through Paraswap, right? Same thing goes with Sushi, right? Sushi is also accessible through Paraswap. And of course, brand new, which I think GL will talk about later, we added Urine Vaults as well, right? So as you can tell, we already cover, if you go to DeFi polls, we cover the majority of potential tools that are out there. And right now we're expanding that one step further with Alphamora, with Balancer, upgrading to Uniswap version 3, and really exciting borrowing, right? Because a lot of our users said, hey, as a fund, one important tool is leverage, right? Being able to borrow funds. And that will become possible very shortly. And before we talk about these new features, just a quick update on the growth we've had, which is amazing because we have these calls. You can look at all the old community calls, and every single time we're looking at almost triple-digit growth, or sometimes 50, 80, 90% growth, and it just keeps going. We're certainly far from the top because every time as we grow, new opportunities happen. And the big opportunity that happened in this quarter was that Unslash Finance moved a lot of their funds over to Enzyme. So they are holding a lot of the insurance fund on top of Enzyme. And as you can see, that alone was roughly, a $50-60 million boost to TBL. And that shot us up 264%, where, perhaps on the last community call, we had, if I remember correctly, maybe 20-30 million. We're now officially over $100 million in total value locked, which if you check 1 year ago, we just barely broke the 1 million mark. So it's amazing that, in the last 12 months, Enzyme TBL has grown by 100x, but also the amount of vaults and the amount of investors keeps on growing significantly. We now have almost 800 vaults, 800, whether that's fund managers, 800 or fund managers, treasuries, automated strategies, whichever you want to use this infrastructure for, you can. And also by now almost 2,000 depositors. And this is also really important because when you looked at Enzyme version 1, when it was called Melon back then, the amount of vaults and depositors was almost always the exact same number, right? Because it was almost always only the creators themselves. But now what we're seeing is also actual consumer demand, where there's users saying, hey, I don't want to launch my own fund, but I want to invest in one. And that's a really important pivot point for the protocol, because the more demand and users there are that want to invest in vaults, the more opportunity there is for somebody to start a vault because they can get discovered. So overall, amazing growth, almost triple-digit growth since April on every single metric, despite the market, shedding perhaps 50 to 60% of its weight. And I think with that, I'll give it over to GL to talk about some new features.
Yeah, thanks. Yeah, I think also part of the growth we saw the last few months is because a lot of things got added to Enzyme. So at the time of our last community call, Curve Finance got added, which allows for you to add your assets in these AMM pools, where you can earn both trading fees as well as additional swap fees and additional incentives. And now we also added idle finance. So it's another yield aggregator where you can store your crypto or your stable coins, which are on Enzyme, and you can choose which strategy you want to use. So they have these yield strategies or risk adjusted strategies, depending on your risk tolerance. There are 6 assets supported right now through it on Enzyme, which you can use to boost your yield from 0.5% to 19% on assets you hold anyway in your fund. Similarly, we had Yearn, which was added as a yield platform with similar APYs, with a big advantage here that this is auto-compounding. So even as a fund manager, you don't have to take much additional actions. You can just deposit your funds in there and it will automatically compound into more of the underlying asset, which is also quite a powerful thing. Here we have a bunch more assets that are supported. So this is also in addition to Aave, Curve, and Compound, which were already available. Well, that's not all. There were also a bunch of user interface improvements to make the product easier to use for both investors and fund managers. Yeah, sorry. So here's a short demonstration of this. I will decrease the playback speed a bit, where you can see that as an investor, you now have, as a fund manager, you have these different tabs where you can stake assets, find extra yield, switch between the different protocols that are available. For instance, here, if you click on DAI, you will have an overview of all the different protocols where you can park your DAI, as well as their current APY. So it's really handy for you to find the best yields using Enzyme. You can really think of it as a yield aggregator at this point. So it's just a matter of selecting how much funds you want to deposit and doing it. Okay, one of the new features as well was an update to the Enzyme SDK, which Erin from Avant-Garde Finance will talk a bit more right now. So Erin, feel free to unmute yourself.
Cool. Yeah. Hey everyone, my name's Aaron. I'm a developer at Avant-Garde Finance. I work on everything sort of above the blockchain layer, including the SDK. So the SDK, as it currently stands, is a TypeScript library, which allows you to interact with the smart contracts that make up the Enzyme protocol and sort of call any function that's available on them. This is super helpful because it means you don't have to learn Solidity. You can build bots, UIs, for example, the entire app, app.enzyme.finance has been built on this SDK. It's really powerful. It's infinitely configurable, but it's not abstract at this point. So that will be moving forward. We'll move towards a more abstract SDK that allows you to say something like trade on Uniswap instead of, assembling all the transactions that need to happen before you actually trade on Uniswap. So that's the goal. That'll happen sometime in the not super distant future, but after the Sulu release, certainly. And then there's also a, depending on user demand, there's a chance that we can start pushing this thing out in different languages. At the moment, it is just TypeScript, JavaScript. But yeah, so there are a couple of resources that you can check out. I'll pop them in the chat. But I wrote a super naive bot built on this thing and wrote a little blog post about it as well. Yeah, so that is the Enzyme SDK.
Yeah, it's also available on the Enzyme Finance Medium blog page. There's a quite nice write-up.
I'll put it in the chat here.
Okay, thanks for that. With this, I think we can move over because the program is quite packed today to some additional guests. So last month, well, between 18th of June and 9th of July, there was a virtual hackathon called Hack Money by Eat Global. And we had some great submissions by people building on top of Enzyme. So really people trying to build a future of fund management. So we'll start off with Silvio, who built Token Blend together with Matthijs. So Silvio, I will make you a host.
Thanks.
Okay, there you go.
All right, I'm sharing. All right, make a few slides about Token Blend. So the team is composed by Matthijs, me, and Uwe. Matthijs and Uwe are engineers. I come from TradFi, and I'm currently working in a startup that tries to list DeFi assets in the traditional capital market. So the idea of Token Blend is to have an asset allocation tool for wallets and Enzyme wallets as well, allowing users to build, rebalance, and optimize portfolios. As main feature, we have the possibility to easily rebalance and lend from the same interface, and choose from predetermined strategies called blends. And also this is done through a simple interface with ladder and order execution. This is done because we saw that building portfolios is difficult, like doing fastly, both from use wallets and Enzyme wallet perspective. So this is the interface. Here the wallet is already connected. Balance is shown. Is also shown how much of the balance is being lent. User can easily, with the sliders, change allocation weights, and also we can select strategies. We are basically a combination of weights. Not only that, you can also execute the orders. So this generates an order plan where for each trade there is a route. So basically this consists in either lending asset in idle or swapping them with integration of Uniswap and Paraswap. Okay, so this says the order is complete. The other part of the application is targeted to Enzyme Vault fund managers. So here we impersonated with that the Techmi Capital fund manager. So you can see from the interface the current distribution of assets. And similarly to the wallet interface, here you also can allocate assets to desired tokens and choose from predefined strategies. So also here the order plan is generated. This is done with the Enzyme SDK. So Paraswap is integrated as well. Regarding the architecture, we fetch data with the graph from Uniswap and Enzyme, and we connected to the application Uniswap, Paraswap, and Idle Finance. Then, as mentioned, we used Enzyme SDK to manage the vaults features. This is, by the way, a Vue.js application, and you can find the entire code base in this repo, which I also share by a chat. That's our submission. Happy to discuss further.
Yes, great. I think we can keep the questions for the end, but like if people already have some questions, they can pop them in the chat. So Silvio, if you could pass on the host to me again, then I'll introduce the next submission.
How do we pass the host?
Right.
Or
I can
Felix
just do it real quick.
Yeah.
Yep, done. Who should I make host next?
Sean,
I think.
Or... No, it's Asgar.
Okay. Wonderful. You're the host.
Thanks. Yeah, I'm Asgar. I'm going to share my screen now. Okay. I worked on a integration for the Badger set vaults for Enzyme for the Hack Money Hackathon. Yeah, this is me, and where you can find me. Yeah, this would make Enzyme Vault managers able to deposit capital into the Badger set vaults. And here, this is the structure of the adapter. And the reason there's a or normally you would just deposit money into for instance, a vault, and then you will get some shares back, and you will put them into the Enzyme vault. But for the Badger set vault, there was some thing called a block lock, they call it, so that you could not move the shares in the same transaction or in the same block as where you bought the shares or got the shares. So because of this, it was not possible to buy the shares directly and transfer them to the Enzyme vault. They would just be stuck in the adapter. And then the operation would fail because Enzyme, as I understand it, requires the shares to be transferred to the vault. So because of this, I created a wrapper, and that will actually hold the real shares. And that will deploy its own shares, or mint its own shares, one-to-one with the Badger shares, and it will transfer those back to the Enzyme vault. For the hackathon, I implemented this for one Badger set vault, and that was the Badger set vault Badger, because it was like a proof of concept. So if there's some future work needed here in order to use this in production or something, and then we need to handle various incoming assets when redeeming, and handling airdrops, because the shares are in the potential airdrops, because the shares are in the wrapper. If there was some airdrops, those will get into the wrapper, and that needs to be handled. And also some of the set vaults are getting rewards and tokens that I don't think yet are supported by Enzyme, and those would need to be swapped when harvesting the rewards. And also we need to think about slippage if there's a big order, right? So there's some work there also. And also the more deploying and testing and integration into the front end. And also I read in the contribution guidelines that the contributions actually should be done to the private development branch. And during the hackathon, I didn't have access to that, so I don't know if anything needs to be redone because of that. Yeah, and that is the state of things. And here you can see the work I've done.
Yeah, thanks a lot. Yeah, like for the Sean can probably like point you in the right direction in case you would like to continue working on this. But I really like it. A really cool proof of concept. For people that don't know, Badger is a suite of vaults somewhat similar to Yearn that can be used to automate yield farming. Make use of like Curve in the backend, convex finance, and a bunch of other protocols, which can make your life a lot easier by taking work out of your hands and automating it in a gas efficient manner. So yeah, really excited to see this. Also, Token Blend is a really nice demonstration, in my opinion, because we see a lot that fund managers want to automatically rebalance their vaults, but currently it does require a lot of like manual calculation or making sure you end up with the same percentage of token allocation before and after rebalancing. So yeah, really excited to like see this project going forward.
Thank you. Definitely interested in going forward with this.
Okay, Felix, can you make me host again for the screen share? Okay, thanks. So with this, I'll pass it to you again.
I'll mute myself. Perfect. Yeah. Right, back to me. Awesome, guys. So I hope you enjoyed everything that you've heard so far with all the new products coming. Now on the token front a bit, like ecosystem news for MLN, we've had several big wins these past few months. The big ones I'm sure you've already heard, which was both not just a Binance, but also a Coinbase listing. Actually, the order was Coinbase first, then Binance. So now the MLN token is officially really listed on every major centralized exchange in the world. From what I remember, we're on Coinbase, we're on Binance, we're on Kraken, we're on Bitfinex, I think we're on Huobi. So literally any legitimate venue that's out there we're listed on, which is a big win. Which helps not just centralized exchange liquidity, but also the same thing happened on decentralized exchange liquidity, because we were added to the Onsen menu on SushiSwap, where there's the MLN ETH pair. Last time I checked, perhaps a few weeks ago, that paid about 50% APY in rewards in sushi tokens. So anybody who wants to provide liquidity to that has done really well. And then also Bancor added IL protection. So they whitelisted the MLN BNT pool. The cool thing about Bancor is that you can do single-sided staking. So you can only stake MLN or only stake BNT. Whereas let's say on SushiSwap, it's always the double pair. And actually, my team, we presented a proposal last week, and I think the voting opened actually today, where there's liquidity rewards for you adding MLN as liquidity. So you can do single-sided staking, and you'll get BNT rewards if this proposal passes. So if you're a BNT holder, it would make sense to vote on that, because once we do that, MLN becomes, at this point, MLN really is a blue chip in the sense that it has the liquidity. It has an incredible product with incredibly fast growing TVL and metrics. And I think, this was one of the last missing pieces, that's got the approval stamp, so to say, from the big names like Coinbase and Binance. And that's all happened this month. And then also we were listed on crypto.com.
Yeah, definitely.
Oh yeah, and Aaron also said, by the way, on the listings, important to mention, we do not pay for listings. So none of this was paid for. That I think,
yes.
in fact, the reason it took so long, right, is because we were going the slow path of building so much traction, it became too hard to ignore. In fact, I think a lot of the decentralized options actually listed us first. And then at some point when, we had so much good news at some point, after years, and now Coinbase has been on a listing spree anyway. They're listing like 3 projects, a week almost. It finally happened, and then Binance didn't want to miss out anymore. So just to make sure that we don't waste our treasury on those kind of things.
Yeah, thanks for clarifying that. Some other news that happened in the Enzyme ecosystem is that you can now take out insurance against potential smart contract bugs in Enzyme. So whether you're an investor or a fund manager, if you feel more safe by taking out insurance, you can do so for about 1.1% of your total assets on Enzyme per year through /finance. So I think they're still currently in a beta, but if you want to try it out, we still have some invite codes to do so. They will go full public real soon, but you can already start using them. So they are also a big user of Enzyme, which makes sense. We get a ton of audits before releasing any code. So together with the security practices of the team, it really shows the strength of Enzyme on that front. So no skipping on security. In other news, we have the partnership come up with ADX, who will integrate Enzyme in their mobile wallet. They'll also do some advertising for Enzyme together with this. We hosted a coding workshop for DeFi Summer for a group of minority programmers, which was quite fun. And we have a bunch of other protocols or projects building on top of Enzyme behind the scenes. So for instance, Exponent AI just got announced last week or last month. And they are building a more simple interface, which can be used for quantitative trading. So to strip away complexities, a bit like Token Blend. So you can make advanced trading decisions through a simple interface. That's still under development. Maybe we'll have them on one of the future community calls. Already looking forward to that. Okay, then we'll hand over to Sean, who will present the latest on Sulu, which is the next release of Enzyme and all the progress that has been made so far. So I'll pass over the hosts. 1 second. Yeah, there you go. So you should be able to share your screen right now. Yes.
Yep, you got it now, right? All right, perfect. Hey guys, I'm Sean. I'm the head of protocol for Avant-Garde Finance, which basically makes me the head of smart contracts for the Enzyme protocol in general. Today I'm going to be giving you guys an update on our next release, which is called Sulu. So just talking about the timeline and walking through some of the bigger, higher level features that are maybe more exciting to a general public. There's a number of improvements that are just kind of more applicable to either diehard fund managers or people building on top of Enzyme, for example, like gas savings and architectural changes and things like that. But I'll stick to the more kind of fun headline type stuff today. So yeah, first things first, for the timeline, we just submitted to our first audit this past week, and we have about a 2-month timeline with a pair of auditors, which will put us on schedule to release sometime in Q4, very likely in the first half, maybe the end of October or the very beginning of November. But yeah, the code is submitted, and now we're just waiting for the audit feedback. So some of the big features that are coming, and these are in no particular order, so not really leading up to anything. But yeah, like the first one is a big one, gas relaying. So we're leveraging the open GSN, open gas station network, to allow fund managers to pay for the gas that it costs to make like different kinds of like trades or other kinds of actions on behalf of a vault to be paid for by the vault, which will be an optional feature. So fund managers who want to use it can use it. Fund managers who don't have to use it. But anyway, it'll be an option, whereas fund managers up until this point, they were fronting all the costs for gas for themselves. Maybe that needed to be reflected in fees. So fees might have seemed to end users like they were a bit too high because they had to be inclusive of the fund manager's actual costs for paying for transactions and stuff like that. But that's no longer an issue. We'll be able to relay, and we'll have our own relayer set up on OpenGSN. The next one is another big one, external positions. So up until this point, you could only hold ERC20 tokens in a vault. So the entirety of a fund's position could basically only be things like Melon token or WETH or like Curve Pool tokens, which have an ERC20 representation. But now we've developed the architecture for a new type of position that we call an external position, which live outside of the vault but belong to the vault. And those can handle non-fungible, non-ERC20 things. So you can hold in a fund things like compound CDPs, which is the first example that we're going to have, like right at Sulu's launch, will be compound debt position capability for funds to hold. And we'll be continuously deploying new types of these external positions as time goes on. We won't be waiting another like 3 or 6 months for the next release. We'll just be continuously developing new kinds of integrations using this feature. The next thing is that up until now, fund manager could only choose from official council approved fees, policies, and adapters, so integrations into DeFi protocols. That's no longer going to be the case. Anybody can develop, anybody can write, and anybody can use any kind of arbitrary fee, policy, and adapter as long as they follow the standard interface to work within the protocol. So this is one that's maybe a lot more exciting for developers and other people who are building on top of the protocol, who don't need to then seek council approval to integrate in different ways as they see fit, basically. And we'll still have the same functionality where funds will be able to choose to use the fees, policies, and adapters exclusively that are council approved, basically. Fund reconfiguration. So up until now, fund can only change its configuration, and by that I mean like the denomination asset. We have this concept of a thing called the shares action time lock in the core. Like the policies that a fund uses, the fees that a fund uses, the percentage of a fee on a fund, you know what I mean? Like everything, basically, this kind of the configuration that's generally unchangeable, but you will be able to change it within the same release now. Previously, you had to wait for a new release to come out, and then as part of that migration process, you could also change your fund configuration, whereas now you can just do it at any time. So you can completely reconfigure your fund if you made a mistake. You can maybe you put like 10% management fee and you meant to put 1% or something like that. So you go back and change that configuration, lower your fees, do whatever you want. And then just like migration works, end users will have a time lock period during which they can decide whether they agree and they want to stay in the fund, or they can opt out by redeeming and leaving the fund. One of the coolest ones now, because it's kind of segues into what will come after I finish up with these slides, we've got the protocol fee implemented, otherwise known as MIP7. So just kind of like the high level view of that is that it's going to be 25 bips on AUM for funds. And we do this basically by proportionally charging that amount whenever a user enters or leaves the fund. And there's a lot more to this mechanism that will just have to be described in much greater detail in a follow-up article prior to the release. Another big thing is specific asset redemption. So up until this point, the only way to redeem shares in a fund is to redeem those shares for your proportionate slice in kind of all of the assets in the fund. So if you held 20 assets in a fund and you redeem shares, then you get a slice of all 20 assets in the fund, which for a lot of users, maybe even most users, is kind of a bummer because not only is it really expensive to do 20 different transfers, but you then end up with 20 different assets at the end of the day. So with specific asset redemption, the user specifies the assets in the fund's vault that it would like to receive. So you could say, I want to receive only WETH, or I want to receive like 75% of my value in WETH and 25% in Melon. And then that's what you'll be receiving from your redemption at the end of the day. So you'll receive the full value of your shares in those assets that you specify. So yeah, we'll continue to have the in-kind option. So users will be able to choose whether to redeem in kind or for specific assets. But the fund manager at the end of the day will be able to decide whether they want to allow this option at all. And if they do, they'll be allowed to granularly set the like rules about the assets that can be withdrawn using this method. And the final thing is that all fund shares are going to be transferable now. So they've always been ERC20 token representations, ERC20 compliant, but the transfer function was just blocked. Now shares are going to be fully transferable. The manager still can specify the allowed options for their particular fund. You know, we still need to respect things like an investor whitelist, so they can still define who the recipients are allowed to be for shares, for example, or who's allowed to send shares. And yeah, this is going to open up cool secondary use cases like creating secondary shares markets. You could open up like a Uniswap pool for shares in a fund and greatly reduce the gas costs of depositing and withdrawing from funds, for example. Yeah, so this is just a slide summarizing all that stuff. And yeah, again, coming first half of Q4 2021. And yeah, that's about it. Thanks, guys.
Yeah, great. Really looking forward to that. Especially like the asset redemption that you can choose and transfer of shares will be really powerful, I think, as well as the borrowing, everything. I think a lot of people have been looking forward a lot to this. So yeah, excited to see it go live at the end of the year.
We are too. Thank you.
GL, do we go with is Q&A now, or I think you've got one more slide on MIP?
Yeah, just one more slide.
I'm gonna say, Sean, definitely stick around because I think there was a few questions that we'll get to in the Q&A.
For sure, I'll be here.
Okay, if you can make me host again for the screen share, Felix, perfect. Okay, so like Sean already mentioned, there will be a token, like the Melon token upgrade. So an upgrade to the token economics, in which we really try to align the growth of Enzyme with the value accrual of the token. So the more the platform is going to be used in the future, the more value will flow into the MLN token, which is the token that underlies Enzyme. So in this first phase, there will be a flat fee of 25 bips, so 0.25% annually on all vaults. This will be paid by the vaults themselves, so not by the fund manager, but really by the investors in it, which will be used to buy and burn MLN tokens, this fee. And as Sean said, this has been submitted for audit. This is only one revenue stream for Enzyme. Like we're also exploring other ways to increase the utility of MLN and holding MLN. For instance, by sharing in referral fees, we now see that there are a bunch of integrations like Yearn, Synthetics, Idle, which all share some of their own fees with protocols that integrate them. So the more AUM that flows through Enzyme in these protocols, the more fees of these protocols flows back to Enzyme, which is good for like MLN and the Enzyme ecosystem in the end. So these are still things that are being explored, the second phase, but it's definitely coming. Like we just have to make sure we do it in a way that's fair and that really boosts the product and makes Enzyme able to scale up even a lot more than we have over the past year. So yeah, Felix, I'm not sure if you want to add something to this slide.
Yeah, you know, obviously as an investor, like I'm really big on the tokenomics side of things. And, you know, 25 basis points, first of all, I think for users is kind of a rounding error on crypto. But more important, I think phase 2 is where Enzyme will really start shining. Actually, I wrote like a mega thesis on Enzyme where my perspective is that Enzyme will be the mega aggregator for DeFi, where you bring all the different tools under one hood. And I think already now, actually, Enzyme is making more money off some of these referral fees than it is making from the basis points. So when you imagine that, you know, if most crypto funds of the future use Enzyme kind of as their on-chain custodian, right? Or if most traders say, hey, let me use Enzyme, because Enzyme essentially becomes this on-chain custodian where you say, hey, I keep all my funds in Enzyme, it tracks my performance, it maybe makes it even easier when tax season comes around. And at the same time, it gives you access to all the whitelist, the safe, right? Because like part of the reason why retail uses exchanges is because it gives them a certain feeling of safety, right? And, you know, essentially with Enzyme, you can only engage with some of the top tier protocols, right? There's never been a rug pull on Enzyme. There's never been a, you know, a hack or exploit or anything. And of course, you know, there's always a first for something, but we take security very, very seriously where, you know, already now 100 million in TVL, the kind of transaction volume we're going to do is going to be significant. And you guys know that there's you know, partnership programs with things like Yearn, where the more volume you send them, the higher fee you can get. So like I think the Yearn program peaks at $1 billion in TVL that you share with them, at which point you get half the earnings, right? So I think phase 2 will be really exciting, and we're definitely always open from you guys too. If you say, hey, I've been working with a project for a long time, perhaps you know them, introduce them to us. We're happy to chat with the team because obviously there's win-win here where we can bring them more you know, trading volume, because ultimately, let's say, for example, if we have to choose between 2 aggregators and 2 aggregators are literally within cents of the same price, it doesn't really matter which one we choose, right? But if they're, of course, forthcoming and offering us a better deal, I think there's a lot of opportunity there. So, because ultimately, I think in DeFi, whoever controls the demand side, I mean, the customer side, has the most leverage.
Yes, completely agree with that. Okay, before we head over to the questions, I think it might also be nice to remind people that you can submit your feature requests or whatever else you want to see added or changed in Enzyme to our Kenny page. So that's enzyme.kenny.io. You can also see which integrations are planned or already have completed. So definitely like head over there if you want to make some suggestions. Also on the listing of new assets, like as long as they have a Chainlink price feed, we can add them immediately. Otherwise, it will take a bit more effort, but it's in often cases it is feasible. And for instance, like the Yearn integration was also just something that popped up here, which wasn't even part of the main roadmap, but still it got integrated. So people are really listened to, which I really like. So yeah, just head over and post your suggestions and comments on what you want to see in Enzyme. So, okay, I think we can open it up for questions. I see there are already some in the chat, but feel free to add more in them. So
yeah, maybe I'll start with one because I saw 2 of the same. or maybe even 3 for Sean. You mentioned the ability to have the non-ERC20 assets. Cis asked Sulu, can you give more info on non-ERC20s a fund will be able to hold? And I asked a similar question, asked, will external assets still need to be whitelisted, individually integrated, or can a fund kind of add anything? Like, what's the process for adding non-ERCs and how will that work? Because for on-chain right now, we, for example, need Chainlink feeds. What's the requirement there?
Yeah, that's a really good question. It's kind of a blend of there still needs to, at the end of the day, there has to be something underlying that that non-fungible position that either corresponds with like the Chainlink price feed or one of our derivative price feeds, or that you could somehow ascribe a value to. So this is kind of like the core limitation of any kind of position that you would integrate into a fund in the current architecture, is the entire universe of funds relies on prices, right? So you can't have an asset if there's not a reliable on-chain mechanism for pricing that asset. So with the case for compound CDPs, for example, we know how much collateral is underlying and how much debt is taken out, and so we can calculate a value of that debt position, right? It would be the same, like another, I think it's fine to say this, another like kind of use we're exploring for this are Uniswap v3 LP positions. Kind of the same thing, like these are non-fungible positions, but like their underlying value actually corresponds with real, underlying assets in that Uniswap pool that we do have price feeds for, right? So whatever is like basically whatever the underlying assets for, as long as they're in the asset universe, they can be supported. Or if there's another reliable kind of on-chain mechanism for pricing them, then they can be supported. But that pricing bit is the kind of key part of the equation.
Understood. So like the common thread I see between those examples is that while it's almost like a derivative asset, but it has underlying assets that we have trusting price feeds off.
Exactly.
So like,
that can't live in the vault for whatever reason. Like
Okay.
with collateral, you have a concept of debt, which is more abstract, and there's not a ERC20 representation of that. And then there's also, the collateral assets, which you wouldn't want to live in the vault and have value taken away from there, which can upset like the collateralization ratio of a debt position, for example, right?
So would we be able to have, for example, non-ERC20s like, let's say, Luna or Rune, or I know there's wrapped versions of them, but not all of them have wrapped versions, or Dogecoin, right? Like, just will we be able to have non-ERC20s like that too?
No, they'll still need to all be, Ethereum based tokens. But yeah, I mean, the direction with those is more likely to be wrapped, as you say, wrapped tokens or synthetics.
Got it. Let's see. There was another question for you from Hans Jörg, who said, how will the specific asset redemption work? Will it, e.g., give an estimate on gas costs? Can you already share more details on this?
Sorry, what was that about the gas costs?
It says when you do a specific asset redemption, will it give an estimate on the gas and or costs of doing so?
Well, I mean, through the front end interface, there will be an estimate of the gas. I'm not sure. Maybe this is coming from a point of.
Well, yeah. I mean, anytime you submit a transaction, you set the gas limit. Yeah.
I can kind of guess where this question is coming from. Maybe it's thinking that the mechanism for a specified asset redemption is actually on the back end exchanging all of those tokens via Uniswap or Paraswap or something like that for the tokens you're withdrawing, which is not the case. You're actually just withdrawing assets directly from the vault, from the fund.
Yeah, so it's a simple ERC20 transfer from the vault to the user.
But wouldn't that change the weighing of the fund?
Yes, so that's why fund managers can choose their like settings, their parameters. So there can be two types of or two mechanisms for single asset redemption. We needed this like actually available in the core to support external positions, since external positions are non-divisible, right? So it needs to be part of the core functionality. But if you prefer as a fund manager to prioritize indexes, what you can do is, we can have as Avant-Garde Finance or somebody else can build a redeemer smart contract, and only that redeemer smart contract is able to call the specified asset redemption function. And so it kind of, queues redemption requests, and the fund manager can queue redemptions and do it in a way so that it doesn't disrupt indexing, for example, right? But what we're expecting a lot more of for kind of basic funds is that they say, well, you can withdraw like the denomination asset, or maybe like give a couple options or something like that.
Got it.
Cool.
And this is highly
Makes sense.
configurable. So yeah, this is how I was just gonna say, this is highly configurable. So you could even say, something like you can withdraw as long as there's still, 20% of the fund's GAV and WETH is still available after the withdrawal or something like that.
Okay, I see we have a few questions related to layer 2s. So one from Mario, whether we plan on launching on Binance Smart Chain, as well as one from Cathedra Capital that says, given that a competitor is launching a Polygon integration, what is the restrictions on layer 2 integrations? Is it a lack of sufficient DeFi ecosystems on layer 2 platforms, or is it a technical or logistic problem? So maybe I'll first give my own interpretation of it, and then maybe Sean or Felix can add to that. But my understanding is that for Enzyme to work, you really need like a mature ecosystem on there. So in Polygon, in theory, you could deploy like a light version. I think that's also what you're referring to as with the competitor. I know Dehedged launched on Polygon, I think like this week, yesterday or today even, although they only have about 6 assets supported on there. So it's quite limited in that sense. So also for Enzyme, you could have an instance like living there, but you will need the liquidity. You will still need Chainlink price feeds for a lot of things. What could work was like adding like Curve on there. Curve is on Polygon, SushiSwap, Paraswap, some other integrations. I think it's still a matter of fact to have like the full composability there, as well as the resources to maintain these deployments. But maybe Sean can give like a more nuanced version of that.
Yeah, and I can just chime in a little bit because I'm usually the one that's pushing Mona on going to layer 2. So like, I pushed on Mona to go to Binance Smart Chain back in January. I pushed for Matic, and funny enough, like I'm a little bit on her side now looking back, because I think a lot of times these scalability opportunities are oftentimes rather short-lived, if that makes sense. So for example, everybody was very excited about Binance Smart Chain in January. And then fast forward 3 months, all of a sudden, everybody was very excited about Polygon, right? And Polygon's still great, but now everybody's excited about Arbitrum, right? And since Enzyme is an aggregator, right, it kind of has to be not a last mover, but a later mover, right? So there's no reason to rush it. So for example, when I said, Mona, like we really got to get on Polygon, we got to get on Polygon because like Aave moved there, Sushi moved there, Curve moved there. We could have an Enzyme Lite, which is something we're considering. But the reality is that, she said, once it's there, we have to maintain it, right? So even if we change our minds, but people spend money and time, setting up their funds, getting investors and building track record, we're not going to change our mind 2 months later and say, like, fully acknowledged, it could be fairly quick for us to set it up, but then it's there, right? Then we have to maintain it, spend resources on it, update it when a new integration launches, get those integrations across different chains. So I think Enzyme kind of like philosophically has taken a rather like slow but really solid approach, where again, never any exploits. Everything is extremely well audited, which is important for what we're offering, like financial infrastructure. And at the same time, rather focus on product, because you'll notice that, while Enzyme was the first asset management protocol, a few competitors have popped up since, right? And some made a splash quickly. But in terms of capability, nobody comes close. Nobody comes remotely close, because again, the question is, where do you spend your time and resources? The teams that maybe spend the time and resources on jumping from, let's say, ETH to BSC to Polygon, and then maybe to, who knows, Avex, you name it, they're going to spread themselves very thin while we're building new features like urine integrations, curve integration, boring integrations, and all these capabilities. So it's kind of like a more the long play. And obviously it's the traction is still there, right? When you look at the TVL numbers. But so, what I'm expecting as a team, and that's where I'll give it over to Sean in a second. The team's obviously looking at all the possibilities, and I think the most serious look is being given to Arbitrum and Polygon, but there is no, I think we want to see where the market goes, because ultimately, what you'll have to understand about layer 2 is goes beyond Enzyme. Is all these side chains are nice and neat, but it will cause fragmentation of liquidity. And ultimately, there will be a reconsolidation on likely the most efficient layer, because if Sushi has liquidity on 6-7 different places, then none of these places have great liquidity, right? So users will go to the one where they can get the best pricing. So if that does happen, you want to make sure you're building on the one that's actually going to be it, right? And so far, Ethereum layer 1 is the one that's still it. And I think rollups is probably the best option long term anyway. But that's partially my take and partially some of the conversations we've had. Maybe Sean has some more insights on what you guys' observations have been about L2.
Oh, you guys basically ticked all the boxes there in terms of like the reasoning that we're not on L2s yet. I mean, the biggest thing is just we have limited development time, and every like hour of tech debt that we spend investigating or building on a layer 2 is an hour of less of features that we would have been able to ship with Sulu. Talking about like the recent release cycle, for example. I also completely agree that it's maybe not winner take all, but it's I think waiting for very clear winners with really like sophisticated like ecosystems to emerge is really key for a product like Enzyme. We're not kind of a base layer like primitive like like lending tokens or simple kind of swap AMMs. We really, as you guys have already said, rely on there being already like a nice healthy ecosystem there. And if it wasn't for if we had infinite amounts of dev time, of course we would like to have already had an Enzyme light on on Polygon and BSC and wherever else. But yeah, this is kind of a focal point that we'll be looking at over the next 6 months or so, is just continuing to stay on top of the emerging ecosystems, and when the timing is right, look at producing something on one of those ecosystems as well.
Yep, and I think that kind of goes into two of the other questions that were asked. One by Raffaello just now, if we will integrate per protocol, and then by I think C's about if we're going to integrate options like Octus or Hedgic. This is kind of literally answered in the layer 2 question, because in terms of perp is right now built on Xtide, and I think perp is switching over to Arbitrum, and I think nearly every single perpetual futures protocol is currently building on layer 2 Arbitrum in particular, whether that's perp, future swap, DYDX is already on Stockware. So the bottom line is, like, to have futures, you need layer 2. You need pretty much instant finality, or at least very quick speeds, and you need also low gas costs. So that's not going to happen on layer 1. And the same thing goes for options. You'll notice that not a single options protocol has really effectively taken off. Why? Because of the speed and cost of layer 1. So I would imagine that, once there is a winner in L2, you will have quite flourishing, derivative space, and then too, we can probably pick some of the best protocols to integrate with. So that will likely come in the same time, is my imagination, because as long as they are built on different layers than Enzyme is, we likely won't be able to integrate, unless Sean, I don't know if you guys have looked at perp yet, but I would imagine since it's not built on L1, that might be tricky.
Yeah, to be honest, I haven't had the research time for it yet, but this is actually on our list of research topics leading up to. We have a company offsite right after the Sulu release, and yeah, one of our research topics for that is looking into the options for options, let's say.
Sweet.
Yeah, great. So yeah, I think we're at the hour, so
There's one more
I'm not
question.
sure. Yep.
Just we want to wrap that one up. Somebody said, Lulepu said, can you explain the burning process of MLN? Will it be similar to version 1 or working another way? That's the final question we have on the table.
In regards to MIP7, right?
Yeah.
I think.
Yeah.
Yeah, so it's a bit more nuanced, and I can maybe give like a high level overview. I'm sure it'll just lead to more questions, but I think it's going to be better to wait until the auditors get through the mechanism and are happy with it. And then we'll write like an in-depth, detailed explanation of how it works, but I can give a high level view. Basically, the new shares are minted from the fund to a contract that's owned by the council, which represents like the AUM at the time of the shares are minted, and that's basically the protocol fee. Those shares are minted in a higher proportion than you actually would need with the BIPS target. So we have a 25 BIPS target, but you'll actually be minting more shares from the fund to that contract. But then you can instantly, in the same transaction, even if you have your fund configured to do it this way, buy back those shares at a discount that gets you to the 25 BIPS target. So there's a lot of technical reasons why we went with this approach. It just made it a lot, the code a lot cleaner. It made the implementation a lot easier. It was, it doesn't rely on prices. It simply relies on like the total number of shares and that equating to AUM. So it's a lot more gas efficient. But yeah, so like the back end, there's a bit more to it than just charging 25 bips. But at the end of the day, it ends up being 25 bips for funds who properly take advantage of buying back shares.
And that when they buy it back with MLN tokens, I assume.
Oh yeah, sorry. So they buy it back with like the value that they're buying back discounted in MLN, and then that MLN gets burnt immediately.
Got it. Okay, so it doesn't happen on exchanges. It happens kind of like in an well, on chain, but in a off exchange transaction between the funds and the protocol itself.
Exactly.
Got it. Awesome.
Okay,
well, guys,
thanks for that.
If there's no more questions, I think we're good to wrap it. Well, guys, thank you so much for coming. I hope you enjoyed it. I think there's a lot of exciting stuff coming, new features, of course, with Hack Money, a lot of new people building on it, which is also exciting to see, the developer ecosystem of Enzyme expand, right? Because then, we're not just limited to, the time and focus of Avantgarde, which is who are crushing it, absolutely. But we're able to build on many different corners at the same time. So really excited for all of you to be here, and thanks to everybody who stayed till the end. We had a full house. So any final words from you, Gio? Otherwise.
Oh yeah, let's talk again in a month or so. Curious to see what got released then.
Yeah. And thanks for all the panelists who joined us. Okay. Hope you have an amazing rest of your week. I'll see you soon. Take care.
Yeah, bye everyone.